Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Canoo, ticker symbol GOEV. And on here, we are looking at the weekly time frame, weekly candles, and what we can see for last week, closing the week on Friday, February 9th, at a price of 15.5 cents. We can see that we put in a bearish engulfing candle for the week. It's not really looking too good with that perspective, but there is one thing on the daily time frame that could be pretty bullish, but it also might be kind of short-term bullish. So I did want to go over that. So just switching over to the daily time frame, we can look at some of the more recent price action. And yeah, I'm just going to throw up my drawings here. All the same from last week, although I did add this purple line here at 15 cents, as I do think that is going to be, kind of a psychological level to be paying attention to. And yeah, so first I'm going to go over kind of the bear case scenario stuff, and then I'll go over one thing that does stand out as perhaps being bullish, which I've noticed before, and it did end up resulting in some runs. So yeah, we'll have to see about that. But yeah, just looking at the daily candles, following up on last week's video, which I put out ending the week on February 2nd, we did put in a close that week at a price of 17 cents, so just above this Fibonacci level at 16.93 cents. So I did think that was good, but I also suggested that it was possible we revisit 1550, and the following day, Monday, February 5th, we did exactly that. We took a spill going down to, let's see, 15.4 cents, but did put in a close at 15.61 cents. So maintaining 15.5 cents as, the lowest close. And in fact, that's what we did put in for Friday, February 9th, a close at exactly that level. One not so great thing is over the course of the week, we did put in lower lows. The 15.61 cents on Monday was a new lower price that we hit, and then the following day hit a low of 15.44 cents, so again lower than that 15.5. But then on Friday, we did put in the lowest value at 15.38 cents. But we did close above 1550 or at 1550. So I do think that is good. However, you might notice it for Friday, we did put in a bearish engulfing candle from the previous day. And also, I do think it is pretty interesting that we had this big red bar down on Monday, coming down about 8%, just a little bit over. And then over the next couple of days, we did see like these spinning tops, kind of, these short candles just making their way up. But then we did see this red spinning top at the top, suggesting that there could be a reversal. And that is exactly what we saw. And I guess one of the tells with that is on Tuesday, the 6th, we saw a green candle. Then on Wednesday, we saw a green candle with a higher close, a close above the previous day's high. But then on Thursday, we saw a red candle day and then also a close, not only lower than the previous day's high, but also lower than the previous day's close. So following that, we did get a move up. That was the opportunity to exit, and then a pullback, and now being at 15.5 cents. Also, I do want to point out that on Thursday, the high of the day was 16.95 cents. So just, piercing barely that 786 level. So I do think that was a pretty important one to be paying attention to, that we did get a bounce from this 100% retracement and then a test of the 786, but ultimately a rejection from there. And so what I could see is, again, this pulling down to 15 cents if we do get a close below 1550. So again, a level to be paying attention to. And really, if we do see one close below 1550, that's not something to, go crazy about. But if we see two closes, that really does confirm the breakdown of that level. And then we could see price start to drop. And then again, with that 15 cents just being kind of a psychological level, if we do get one close below it, really that's not good, but getting two closes below it really confirms, the weakness, that the stock is not showing strength and that it could be going down. And I did make the case that from this extension here and this extension over here, this retracement over here, these two retracements, from those we can pull up the 1618 retracement, and that puts price right around 12 cents, really between 11, 12 cents. And so that is why I do have this alert here at 13 cents. If price does drop that low, I will be aware to kind of assess, do we get multiple closes below these levels or just a wick below? If it's just a wick below, that could suggest that these are going to be respected as bottoms. If we get closes below, that does suggest that further downside is likely. And I do also want to point out that these two levels do seem to coincide pretty nicely with the top of that wedge. So if we do dip to those levels, it's quite possible it could be a great dip buying opportunity if we are to respect the top of that wedge. But it is possible, like I said, if we do get closes or, multiple closes or, just one close below those levels, keep an eye on them, because if we do get two closes below, it's likely going lower. But then the one thing that does stand out to me as bullish, you might recognize this from previous videos, but here we do have the RSI making higher lows, whereas the price here was making lower lows. And because we did put in a lower low on Friday as well as Monday, we are seeing lower lows formed in the stock price, whereas the RSI is still up. Even between Monday, the RSI was at 3826, and then we closed the week at 3873. So not much higher, but still higher, whereas we are putting in lower lows in the price. And so that is, this bullish divergence that we saw here before this run up. And, I've always been surprised that the next day we see a big candle, over 20% on the day. So I do think it is possible that we do see a green candle starting the week, that we could be hitting, 1850, testing that again. If we do close above it, that could be a good sign, but then look for strength following it. We did see a little bit of a pullback following that big run up, but that was really just like kind of a small bull flag before continuation up. But then we did see this big bearish engulfing candle and then a retracement, a full retracement. So if we do see some bullish moves, look for close above 1850 to reclaim that. And then if we can get multiple closes, like here we only got one close above 20 cents. If we can get multiple closes above that level, that could be putting the stock in a kind of different scenario where we could be moving up to like 25 cents. But right now with this bearish engulfing candle, I could see definitely a dip to 11, 12 cents. But as I have been before, I could definitely be surprised by this, moving up a lot. So, if it does, just keep an eye out for it showing weakness following those big moves up, whether you want to sell your position or trim it. This big bearish engulfing candle was really a sign that it was a good time to exit because there's a pullback, or at least a good time to trim and then add back at this 100% retracement. But also, keeping in mind that we could be seeing these lower levels. So don't get too greedy here. We may very well not see a big green bullish candle tomorrow, but it is possible. I think it could be big green or red tomorrow. We'll have to wait and see. But, those are my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.